lots and lots and lots and lots and lots and lots and lots of things to talk about today. So we have, of course, primarily, for those who haven't noticed, I've changed the title for the webinar for today. Okay, today only will be a more focused part of the webinar. Okay, and what I mean by that is we will dive a little bit deeper into Israel attacking Iran and, gold sort of soaring as an effect of this. We saw oil as well soaring as an effect of this. We saw Canadian dollar being very bullish as an effect of this. So lots and lots of stuff's happening around the market at the moment, okay? And all of those because of Israel and Iran. So it's not only the data that the marketing is looking at the moment, okay? So sometimes we need to use the context as the whole market. It's not only, we're going to have CPI. Well, but sometimes CPI is not that important because what the market is looking now is the PPI, or is the PMI, or is the GDP, or is what is going on around the world. So lots in different ways we can analyze the market, okay? And I want to show you guys the different ways you can look at into the scope, let's say. So grab your notebook, because we will be getting lots of things today. And if you have any questions, as always, please just, send me your questions through. Let me see if we have any new people here. There's Latif Idowu and Green Montesil. Okay, well, I've never seen those names here, so I'm assuming it's a new person, or if it's, it's a new account, or maybe it's your first time here. Welcome. Make sure to make yourself comfortable here with us. If you have any questions, you can just send me over in the chat. We will run down, we're just sort of, you can see on the screen right now what we're going to be talking today. I will do the risk disclaimer. And then we can start. So for those who don't know, we do have this webinar every Tuesday, Wednesday, and Thursday. So Tuesday from 4 to 5 p.m., Wednesday from 4 to 5 p.m., and Thursday from 4 to 5 p.m. in Australia time. The easiest way you can get the link is joining the Telegram, and soon that happens. Soon hits 4 p.m. Or a little bit before I send the link so you can join. Cool. All right. That being said, I will put the risk disclaimer up and give it a minute or two for everyone to go through, read it, and then I will be back and we can start. All right, cool. Let me take this off. Perfect. And I think we can come to gold for a second, and then we can go from there. Okay. So is anybody trading this week? Does anybody have any trading activate, or is anybody managing portfolio or anything like that? Send me over, because I'm quite curious to know that. No one? Interesting. Okay, maybe. Let's see. Yes, Barry said yes. What are you guys trading? What are you guys looking to trade at the moment? Is it more commodities? Is it more FX? What are you guys looking to the market at the moment? Some people saying looking to short euro pound, long Australian dollar, watching euro, gold, watching Aussie CAD. Okay. Interesting. Okay, so that's good. Some movements happening. Okay. Yeah. why start with this question? Because that's the time when everyone should be looking to trade, because market volatility sparks, and there was a long time we didn't have that sort of volatility happening to the market. And as I just mentioned at the beginning of the video, at the beginning of the webinar. Jesus, forgot the name of this. So as I mentioned at the beginning of the webinar, we have quite a few things happening. So um, first, I think we need to sort of step back a little bit and try to analyze and how did we arrive at this point of high stakes confrontation between Israel and Iran. You know, it's tempting to view this as a sudden flare up, but it's in truth, this is a cumulative of years and years, you know, decades, even of ideological opposition, you know, proxy warfare and strategic maneuver. So for years, Iran, let me just open Iran is map images. Okay. This one should be fine. Okay. So we can see Israel and we can see Iran here. Okay. So Iran is pretty big. We have Iraq and we have Syria. We have West Bank, Gaza, and Lebanon. So just, you know, those two here, Israel and Gaza, pay attention those two. Even this one is a little bit better. Yeah, that's good. So for years, Iran has tried to expand the regional influence. Okay, often indirectly, but you know through proxies such as Hezbollah in Lebanon, the Houthis in Yemen, and various militias in Iraq and Syria. Israel, on the other hand, has tried to maintain a policy of preemptive deterrence, striking Iranian infrastructure and supply lines whenever it perceives a threat. And these quiet confrontations have now escalated into a much more direct and public military exchanges. We've seen we've seen the drones, you know, missiles, cyber attacks, assassinations. You know, each event more public than the last. So, with Israel targeting high-value Iranian assets and Iran retaliating in kind, financial markets have begun to recognize the potential for this conflict to destabilize not just the Middle East, but global trade routes and energy flows. So the conflict sits quite in the intersection of several global power plays. You know, so United States under pressure to reaffirm its commitment to regional allies has increased the naval and air deployments. Russia, stretched by its war in Ukraine, is watching closely as well, concerned about oil volatility and strategic balance. China, highly dependent on Gulf energy, has vested interest in ensuring stability as well. You know, tough. It's quietly working to expand its diplomatic footprint in the region. Markets are not immune to this complexity. Okay. It's cash for the multi-industrial war complex. Yes, I completely agree with you. And actually, I was going to talk about that a few minutes later. But we had that's kind of funny. We had Israel attacking Iran on last Friday, and then Trump says that he didn't had anything to do with it. Okay. What's the biggest industry that US have is the ammunitions. Okay, it's whenever there is war, and that's a very sad fact, but it's true. Whenever there is war, who makes the most money is US. Okay, um, because they're the ones that will supply the arms, the guns, the money, the ammunitions. The gunpowder, the drones, the technology, everything. They're the ones because the companies that do this are from US. So it's always in there. So the money always will flow to US. Okay. Um, and it's kind of interesting because here's the first key point I want to remember today. The markets, they don't wait for confirmation. The price reacts before the event is fully understood. And traders, they move on headlines and automated systems, and they are designed to respond instantly to those headlines. That's why we need to think proactively. You can't afford to wait for clarity. You must develop scenarios, monitor probabilities, and prepare for responses in advance. Okay. I think this background sort of makes it more clear for everyone. The background with the background in mind, let's try to pivot to how the conflict is influencing the whole global commodity market. Whenever Middle East tensions sort of rise, oil prices is the first one to respond. Okay, so if we just come back here at WTY, yeah, let me just grab a horizontal line, vertical line. Friday. Oh yeah, that's a 4-hour chart. Let me just go to like maybe 50 minutes. Yeah, so at 10:30 a.m. Oh, that's not in Australia time. Australia, Sydney. So 9:30, 10:30. There you go. So at 10:30 time, in Australia, a little bit before actually, at 9:45, we had the attack in Iran and Israel. Okay, Israel and Iran actually. So the first one that react was oil. And the logic is simple because, it's simple but very powerful because roughly 1/5 of the world's crude oil, they pass through the Strait of Hormuz. Okay. So if we look at Strait Hormuz, this guy here, images, there you go. So that's the Strait of Hormuz. Okay. And that's Iran right here. Okay, so it's very close, and a lot of like at least 1/5 of the world's crude oil passes through the Strait of Hormuz. So, which is effectively under Iranian, as we can see, oversight. Any suggestion of disruption to that critical shipping lane, even a rumor, send like heaps and heaps of volatility to the oil prices and oil market. Okay, so if Iran from one day to another comes and say we're just gonna close that for a couple days, imagine oil prices. They're gonna go to the roof, right? Because that's where we get oil prices. Like you, me, most likely, we get from ship that has been going from that part. So in this conflict, the reaction was immediate, as we can see into the chart, right? It didn't wait. It was like literally boom, 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 all the way up. And now it's retracing a little bit back. But the WTY spiked pretty sharply, actually, more than 5%, I think. Yeah, like 10%, after the first major Israel airstrike. And it wasn't just because of fear around disrupted supply. It was because the market began pricing a whole new risk regime. We're no longer talking about isolated rocket attacks. Okay? We're talking about the potential for prolonged and significant disruption into the global oil flow. And to this, that the fact that Iran continues to export oil despite Western sanctions, much of the flows through shadow market and indirect routes. If these clandestine channels are blocked, or if Iranian ports are hit directly, this could reduce effective global supply by maybe 1 to 1.5 million barrels per day. And that's enough to push prices much more higher than they are now, especially in an environment where demand is still very resilient. I mean, everyone needs oil, literally every single one of us, because directly or indirectly, you are using oil. Okay, I don't care if you like or don't like, but for you to go to work, there is probably oil somewhere. Okay, for your clothes at the manufacturing, there were probably oil somewhere. To go to one place to another, there was a truck. Okay, so you're using always you're going to be using oil. Okay, some say, is that why the oil cartels upped the production even though there was no demand? Well, it could be. It could be. I don't have an answer for that, but it could be that would be very smart for them, actually. But anyways, meanwhile, OPEC, they sort of find itself like in a tightrope, because countries like Saudi Arabia, they don't want to see oil prices rise so fast that they threaten global growth, but they also want standby if Iran starts to lose market share due to the conflict. So, expect strategic production decisions to be influenced not just by economics, by the geopoliticals as well. And that's exactly what Sam say. They rose the production before even that happened. So they're not dumb, man. They're literally not dumb. Now, the other one that has been very influenced is gold. So we go into gold. Um, you know, we've seen a classic safe haven beat, I would say, but it's not just a temporary flight to safety. There's a deeper narrative at play here. In the past year, we've seen a surge in central bank gold buying into the Basel III Act, for those who know about. Particularly in emerging markets like China, India, and Turkey. These are long-term accumulations driven by a desire to diversify away from the US dollar risk and gain resilience in a multipolar financial world. And of course, as a result, gold has not only spiked during the conflict, it has maintained pretty strength until this morning. And that is suggesting to me that we are into a structural bull trend that could be accelerated by the further conflict. If there is any further conflict, we will probably see gold continue to go higher. Even that could be a catalyst movement. That could be a catalyst for gold go above the all-time highs of 3,600, if I'm not wrong. Let me check. It's just around the corner. It's here. 3,000. Yeah, 3,500. Okay. So what I'm looking to gold is probably coming back below this area and going up. And that's my top one. Okay. So that would be my first trade scenario. Waiting for gold to drop below this area and then buy at around this and just wait for this to go up. And that would be my first trade scenario. Okay. Now, in terms of strategy, as I gave my first one long on gold, I do have, if you're trading oil, consider volatility plays. Buy oil and try to limit your risk, or trade calendar spreads if you're more, advanced into that. But let's say if you don't want to trade oil, I can talk about a bit later afterwards as well. But another good option would be shorting Aussie CAD, because there's a few things here. Okay, the first thing is we have a Australian dollar as a risk on sort of currency. And Canadian dollar, very in I forgot the name of I forgot the word, encompass with oil. Okay, so pretty cool is we have Aussie CAD, and if I add WTY into like a new price scale, and I add this one into a line as well, and then put into maybe 4 hours. There's something very cool here that you guys will be able to notice, is that in the last time, the last week, sorry, gold, sorry, not gold, in the gold area, the gold line here is Aussie CAD, and the pink line here is WTI. So when oil starts to rise, all right, Aussie CAD starts to fall, and that's due because of the Canadian dollar. Okay, so if you search Canada oil exports or production exports, you can see that in 2023, Canada exported approximately 4 million barrels per day of crude oil, with the vast majority, 97%, going to the United States. So that's in 2023. Imagine now it's much more. Okay, so it's a currency highly dependent on oil prices as well. And I remember in 2000. 2021, I think, or 2022, we had a very consolidated oil. Okay, so it was very consolidated, and US dollar CAD was very consolidated as well, and Aussie CAD was very consolidated as well, because anything with Canadian dollar was kind of consolidated, because Canada was gaining strength and then losing strength, gaining strength, losing strength. So it's not only about how, one type of asset is going up. Should we long or should we short that? But it's about the risk option for a certain asset continue to rise, and that asset has a correlation with another asset, so we can probably catch the fat tails of those movements. And when I say that, I mean like we can probably catch a certain movement that hasn't yet been caught into that. Let me just drink some water, guys. Cool. So that being said, I think we can continue. So for gold, I think about more likely I will be looking to do multiple entries on gold. So as I say, come back here. So as I say, looking to start longing somewhere around $3,355, and then maybe continue to long into $3,325, and cut my positions of long if we have a breakout of below 3,300. Okay, so if we have a breakout below 3,300, then I will be cutting my positions out. And but yeah, majority what I will try to do is I will try to hold these positions of gold and until we hit an all-time highs again. Okay, so if you look at here, horizontal ray right here, so has been 3,484. So I just want to hold above that and see if we can catch another another breakthrough there. That part. And above all, don't chase parabolic moves. In crisis environments like we have in our reverses, can be as fast as the original rally. So your goal is to position into fear, not after it. Okay, so what I think it will happen is this will escalate very quickly because we have Trump, as I've mentioned on the Telegram today. We have Trump just did a truth, a tweet or X, whatever you want to call it, saying that Iran should have signed the deal. We don't know what deal is this, but anyways, Iran should have signed the deal, and that I told them to sign. Okay, so what a shame and waste of human life. Simply stated, Iran cannot have a nuclear weapon. So Trump is saying that Iran cannot have a nuclear weapon. Maybe there's a few ways you can interpret that. Iran cannot have a nuclear weapon. I'm not going to let them do this. I will go and, don't let them do this. Second is, Iran cannot handle a nuclear weapon because they would attack all the people, and etc. So there's a few ways you can interpret. I think the way he is trying to say is the second way. Okay, so and then he just finishes saying that everyone should immediately evacuate Tehran. So I reckon what can possibly happen is an escalation further into Israel and Iran. That being said, most likely US will come on and will support Israel. Maybe through like to jets or through ships, guns, ammunitions, or drones, etc., intelligence. But they will probably be helping Israel. And if that happens, then things will get pretty hectic. And I think money will fly to US dollar and money will fly to gold. Okay, so yes, Sam, I'm expecting a breakthrough, that resistance here, whatever you may want to call that, support, resistance, supply zone, demand zone, whatever. I just think that that's gonna go above the all-time highs, and most likely that will be the last possible time for someone to join the party. Okay, cool. So that being said, these are my top two setups. Now let's take a moment to reflect of what's happening to currencies as well. Because this, of course, there's a lot to do with macro. And you maybe think, oh, what about the yen? What about this? What about that? Well, let's have a look at US dollar Japanese yen first. See, there you go. Cool. Let's put in two candles back. Two candles. So we just had the decision today, and nothing pretty much changed it, as I say on today's video. What is the setup on AUDCAD? I'm gonna tell you in a second. So let's begin with Japanese yen first, and we can go into Asian currencies like Aussie dollar. The yen has long served as a haven during global crises, and part of this is due to the behavior of the Japanese investors, who tend to repatriate funds during uncertain times. They try to create upward pressures on the currency, but it's also about structural factors like Japan's deep and liquid bond market, and it's very relatively stable politically system, and the fact that much of its foreign investments is funded through carry trades. When those unwind, then the yen rallies. Um, as of we had today, the monetary policy all across it seems to be at extremes. King dollar reversal. I reckon. Or maybe we will have some sort of reversal into the US dollar with that. With that war happening, we may have some safe fly to safety, sort of US dollar safety, maybe safety. We will see in the next couple of days, but yeah, I reckon we can start to see some strength coming back to the US dollar. Anyways, so as I was saying, today we had the interest rate decisions from the Bank of Japan, and as you can see, of course it's a 4-hour chart. I can move down to 50 minutes. And you can see that nothing quite really happened. Interest rates decision was as expected, 0.5%. But as always, what they're waiting for more more CPI, higher CPI. Okay, they're waiting for higher inflation, and that's exactly what they want. They want more inflation to be able to continue to hike the rate, because there's no need to hike interest rates if the inflation continues to be pretty no changes. Okay. So just for the yen, I would say watch the inflation better than ever. And if inflation sort of goes up, then we have some sort of movement happenings to yen. Okay. Now, the US dollar, as of Sam, I think Sam sort of mentioned about the US dollar. It's a bit more complex, but the dollar is, I think everyone knows that, but it's the world's reserve currency and benefits from extreme liquidity. In most crisis scenarios, it sees inflows. Okay, but the dynamic changes if the market believes that the Fed is likely to pivot dovish, or if U.S. assets are perceived as vulnerable. So while US dollar tends to strengthen, like initially, if those crises becomes more prolonged, it can introduce ambiguity, and we may be looking then to bearishness into the US dollar. But in my understanding, for now, it would be good. Okay, in the next couple of weeks at least, we may see some dollar strength. So let's wait and see. Now, coming back to Asia, the risk side of things, for those who don't know, currencies like Australian dollar, New Zealand dollar, and emerging markets FX, they tend to suffer a lot in when those things happen. The Australian dollar in particularly act as a barometer for global risk appetite and China's growth outlook. So if we go to Aussie CAD, we're looking at a small risk off sentiment at the moment. Okay, it's more risk on sentiment at the moment. Do I think it will continue to? I don't believe so. I believe it most likely will continue to fall quite soon. So, in particularly Australian dollar, as I say, it's more like a barometer for global risk. So, when Australian dollar is going up, we have risk on. When Australian dollar is going down, we have risk off. As soon as the fear enters the market, Australian dollar gets sold. Okay, so as we saw right here in last Friday. Okay, so in particularly, and same as for the New Zealand dollar. Okay, so New Zealand dollar follows a very similar path. While emerging markets get hit by the capital outflows, And this brings us to the, one of the actionable trade ideas. One of the best trades in this macro environment, in my view, is short AUDCAD. Okay, oil strength will benefit for the Canadian dollar, as of the risk aversion and China exposure weight on the top Aussie. It's a clean thematic setup with strong fundamentals and clear technicals. So just go to a 1 hour chart. We had the break. We're still sort of in an uptrend move, but we're in this more downtrend cycle. But if we look into here, we may be arriving at the 61 very, very soon. All right, so breakdown, come back to here, and probably continuation down. If the war sort of continues, then we may continue to see that going down. If for some reason it goes above this area, I'm not interested into shorting anymore, and we'll be looking to just keep an eye out and not doing anything. So yeah, shorting AUDCAD for me is one of the best trades at the moment. Another play is, of course, US dollar CHF. Oopsie. So US dollar CHF, you get exposure to safe haven status of both currencies, but the dollar typically edges out when volatility is high. So use tight stops and try to scale in as momentum confirms. So long US dollar CHF around those levels is good as well. If you want to, CHF Japanese yen can also be a good trading setup. So CHF Japanese yen, it's a cross, and that cross sort of reflects relative safe haven demand, and it can often sharp intraday moves, as we can see here, and it play true options for breakout strategies as well. So I would say that if you are a trader, do 1 year trading, do daily day trading here on CHF Japanese yen would be quite well. But my top 3 setups is AUDCAD short, US dollar CHF long, and daily trades on CHF Japanese yen, depending on your strategy then. And of course, lastly, and last but not least, don't ignore the role of the central banks, like the Fed, ECB, Bank of Japan, the RBA, all watching this closely. If oil spikes driven inflation up, but growth sort of slows, we could see a return of stagflation-like fears, and that puts central banks in a bind. Cut to support growth or hike to fight inflation. So this is why bond markets are key. So always, as I say, watch the yield curve. Where it is, there it goes. So we have the 10 years, we have 2 years, we have Japan 10 years, we have Europe 2 years, we have Europe 10 years, Australian 2 years, Australian 10 years. We have the VIX as well, quite low volatility, and the NASDAQ 100. Anyways, so this all will tell you what the central banks are hesitating to say. Okay, cool. I think we've come to an end. I gave my 3 best setups for the next couple of days, for the next couple weeks. Let's see how this goes. And tomorrow, as usual, I will be here from 4 to 5 p.m. And if you want to catch some trades with me, make sure to come and join us. I will be sending the link into the Telegram group. Okay. Otherwise, take care. And yeah, stay safe out there. Use good risk management, and I'll talk to you tomorrow. See you guys. Have a great day, and chat to you soon. Bye bye.